What if there was a trading contest and the grand prize was $1 million, but you couldn't use any indicators? What would you do? Right? See, a big problem in the trading community is that beginning traders are taught to read indicators instead of being taught to read price charts. All right. Now, what if I told you that it's actually easier to read a price chart than it is to try to read 3 or 4 indicators all at the same time? Right? Now, if you stay to the end of this video, I'm actually going to prove to you how easy it really is to read a price chart, okay? Because you've already heard that the market can only do 3 things, right? You've heard that either the market is trending up, the market is trending down, or we're moving sideways in a range fashion. And that's great information. That's great information. And that is very true. The only problem is that's the macro level, right? That's the high level of what's happening on a price chart or in any given market at any given time. Okay, but when you drill down to reading the candlesticks, you know, if you're reading them bar by bar, or if you're reading the patterns, what you will see is that the market moves in a very predictable fashion. Okay, you've heard, if you've watched my channel any amount of time, you've heard me say this over and over again, that the market moves in twos. It's called the rule of 2. Not only does it move in twos, it moves in what I call a market cycle. Okay, so this is the ground floor stuff here. This is the basics. This is the fundamentals. This is the foundation of reading candlestick price charts. All right, that the market moves in twos and it moves in a market cycle. All right, here's the market cycle. Let's get right to it today. The market cycle is, you're going to get a trend break, retest to a new high or low, depending on which way the market was moving. Okay, the market loves to retest past highs and low price points. Okay, so that is the basic movement. You know, you've heard it, like people say the market moves in a staircase fashion when it's trending, right? What it's really doing is it's moving into like a rule of 2: trend up, trend break, retest new high, trend down, trend break, retest to new low. That's how the market actually moves. Okay, so you as a new trader, when you decide to learn how to read a price chart, when you decide to learn how to read a candlestick chart, and you can start to see that rule of 2 playing out, the whole trading world opens up for you. I mean, there's so many different trades that you can take once you know exactly where you are in the market cycle. All right, so the thing about that $1 million contest is actually real, okay? Because every single trader has the potential, if you learn how to read a price chart, right? The profits that you can make are unlimited, right? So that contest is real. Every trader has the opportunity to make $1 million. Just think if you have bought gold 6 months ago, right, and added on every pullback, you would. So I'm telling you right now, somebody made $1 million on gold this year. Okay, hands down, somebody made $1 million trading Bitcoin this year. All right, so in trading, the possibility of big money that's there for everybody. That's why everybody is trying to get into trading, right? But if you have to positively have to learn how to read a price chart. All right, so we're gonna go over to some charts today. All right, and I'm gonna show you in the next 10 minutes that the rule of 2 is a real thing, that the market cycle is a real thing. And if you learn, if you this video right here, you may need to play this video back. I'm telling you right now, you may need to play this video back over and over and over again, because what I'm about to show you is going to teach you how to see the rule of 2, how to see the market cycle, and how to take solid, high probability price action entries when you see these things develop. All right, so let's get over to the charts because we're going deeper today. Let's go deeper. All right, guys, let's roll. So here we are looking at a naked price chart. All right, there aren't any indicators, right? There's nothing but Japanese candlesticks, right? And they represent the price action for this day. We're going to look at a complete day. You know, this dotted line in futures is the start of the day. and the day ended all the way over here. All right, so we're just gonna read the price chart, all right, for a complete day. But what I want to show you is that the rule of two is real. All right, the market cycle is real, and I'm gonna show you how you can see it yourself and practice it so that you can start to take advantage of these movements. So check it out. Just starting off real quick. We're gonna start from the bottom. All right, so I would have started from the top. If price was up at the top, prices are at the bottom. We're gonna start from the bottom. All right, here was a low. All right, so what did prices do here? Prices trended up right here. And so I'm gonna use channel so you can see this clearly. Now look, we are fitting nice and neat inside of this trend channel. That lets us see what's really happening. We're clearly moving up, okay? Now, let me get my two together here. Now, as we move up, I want you to see something. I just described earlier that the market moves like this. Trend up, trend break, retest a new high, okay? This is a complete market cycle, all right? I've been showing this quite often lately. Trend up, trend break, retest to the new high. That's how the market moves. Here's leg one, right? Here's leg two. This is what I mean by the rule of two, okay? The market moves like this. You will get two legs. Some people call them legs. Some people call them measured moves. But this is how the market moves on a smaller scale. It's doing this on a large scale too, but definitely on a smaller scale. It moves in movements of two. And coming down, it's like this: trend down, trend break, retest a new low. Leg one, leg two. The market loves to move in twos, okay? So what I want you to see is this. That's what it's doing right here. This is leg one. This is our trend up. Once we break out of that channel, this is the trend break, right? This is the low. If prices don't come back and make a new low, this is nothing but a retracement, all right? So because we got this low, we got a trend up. We're clearly going higher. Trend break. So what are we expecting? Remember what it looks like? It looks like this. So we're expecting leg number two. And what do we get? Trend up, trend break, retest a new high. We got leg number two. This is leg one. This is leg two. There it is right there. There's the rule of two. There's the market cycle. All right. That's how markets move. Now, we push up, push up, push up. We make a new high, right? So let's start from this new high right here. I want to show you something. If you see, we got a little trend working down now. It's fitting nicely in that channel, right? So what do we have here? We actually have a trend down. Here's the trend break. We've closed outside that channel. Then what does prices do? By golly, Miss Molly. Shoots down to a new low. This was the low. This is the new low. But what is it doing? It's making our pattern. Trend down, trend break, retest the new low again, right? on a short scale. But this is what I want you to understand. At this point, you know that we're in an uptrend, okay? So you're not trying to take any shorts if you were looking for a trade in this example. We know we're in an uptrend, right? But we know that prices don't just go in one direction. They have small retracements, right? Small corrections, some may say. So this is nothing but a two-legged correction. But the market moves in twos, so it goes up, and then many times it'll make a two-leg correction, then it'll make another move. So what we really have here is a huge leg up. This is a two-legged correction. Now, guess what? Do we think it's gonna make another move up? Yeah, it did, right? But I just want to show you the rule of two. So let me not get ahead of myself. But there you have it again, another rule of two, right? Now, what's next? We got a low here, right? So let's box this up, right? Oh, and to draw channels correctly, you start at the lowest point and then you take it through the first body you can get through. So really, I could do it like this. I could do it like this too. And you can even see it here. Look, trend up, trend break, retest a new high. All right. I just want to make it a little bit bigger because there's a bigger thing going on here too. But that is actually accurate. This is accurate too. We got a nice channel working up here. Nice channel working. This is nice channel working. Prices is fitting nicely in that channel. And then what do we get? We get a trend up, trend break, retest a new high. Here it is again. Boom, same thing. Trend up, trend break, retest a new high. Trend up, trend break, retest a new high. This is leg 1. This is leg 2. Can you see the rule of 2? Can you see the market cycle? Now, right back smack in the middle here, this is a high. Push down, first down, push down. Second entry long right there. For those of you who like second entry longs, you take this boy right here. I mean, that thing, you get in at 75, ride this puppy up to 5,800. That's 25 points right there. This is a 25-point run in futures. That's big money, okay? I'm just saying. Just saying, that's big money. But again, we got a trend working up. We get a trend break, retest a new high. Rule of 2, leg 1, leg 2. Market cycle. It is everywhere, people. Okay. I'll take that back. Not that it's everywhere. This is how markets move. Okay. This is how you can read a price chart without any indicators. All right. And again, this is happening on a small scale and a large scale. The market moves in twos. Let me show it to you one last time. If I go from here and touch the first body, this is a nice little channel working up. But look, it's also a trend up, trend break right here, retest a new high. So the market move. This is how the market moves. It moves in small trends. You know, you get a small little baby trend like that. This is a trend. I mean, you got 1, 2, 3, 4, 5, 6 candles in a row. This is a little minor trend. You get a trend break, small pullback, and then boom, off to the races. This is how the market moves. Okay, so let's keep going. We're just reading the price chart here. We headed down. Look at this. Look at this nice little clean trend right here. This is a nice little trend. What do we get? Okay, so now we going the other way. What do we get? We get a trend down, trend break. What do? We retest to a new low. This was the low. We made a new low. So what does that look like? It looks just like I draw it all the time. Trend down, trend break, retest to a new low. Leg 1, leg 2. It's the market cycle, people. This is how markets move. Let's keep going. Oh, look at this. We got a little trend going up. Let me say this also too. Once you get a complete market cycle, typically prices are going to go the other way and kind of do the same thing. All right, you're gonna get a cycle the other way. We got a little trend working up here. We got a trend break. This one didn't get lower, so I would be expecting to go higher. And look, trend up, trend break, boom, retest a new high right there. And you can look at this one. You can look at this one. You can say, here's low. We got a nice little trend working up here. It's fitting real nice in that channel. Trend up, trend break, retest a new high. I mean, the reason I can show this to you over and over again, trend up, trend break, retest a new high, which is my pattern, is because this is how the market moves. Okay, I'm not making this up. This is not theory, right? You can go from chart to chart. I don't care if you're looking at S&P 500, ES, gold, euros, whatever you want to go to. You're going to notice that the market moves in twos if you start to look for it, right? This is just how the market moves. All right. It just is. So I'm gonna show you another one. So we got this trend working down here. All right. This is a bigger one. We got this trend working down here. Let's see the two legs in the other direction, because even with retracements, you typically get 2 legs. That's one. This is another leg back. And then finally, we dump right here. Boom. And you kind of can go like this. Right through here. Bang. Can you see it? Let me draw it. Trend down. Trend break. 2 legs back, retest the new low. This was the low, then it made that new low right there. The market moves in twos. Okay, let me take a couple of these off because that looking kind of messy. But the market moves in twos. Okay, over and over again in small little, segments. So, man, even here, start from this top here. We got a nice little trend working down through here. We got a trend down. Here's the trend break. Let me grab my pen. Trend down, trend break, retest new low. This was a low, we made a new low. It just happens all the time, people. Push down, came down lower again. Kind of came down lower again. The market just, I hope you see this, right? I hope this is really helping, because this is how you can read a price chart without any indicators. And you don't have to use a channel. You can use a trend line. Check this out. We got a nice little trend working down through here, right? Here's the break right here. What do we get after the break? Retest to a new low, all right? And when you learn how these things move, then you start to see the patterns. Like, first learn how prices move in two, right? First learn that prices move in two, learn about the market cycle. Then you start to see price action setups like this. Here's a high, here's a lower high, here's a beautiful signal candle. You go short right there. This is a lower high setup, AKA wifey trade. Bam. Okay. Beautiful, quick, huge run. There you go. So once you understand that the market moves in twos and understand about the market cycle, then you will start to see the natural setups that happen. And the natural setups that happen are these high, lower high. There was a second entry long I pointed out earlier. Right here you got a high, push down, first entry, push down, second entry long. Okay, this is another right here, this is a low, push up, higher low. You can go right there, bang. Okay, so by understanding how the market moves, by understanding the rule of two, by understanding the market cycle, then you will start to see the natural price action setups that happen on price charts each and every day. And when you start to take advantage of them, you will start to grow your trading account, and you won't need any indicators to do it. Just learn how to read the price action, learn how to see the rule of two, learn how to see the market cycle, and then take advantage of the natural price action setups that's going to come with that. All right, so if you was digging this one, you already know, hit that like button for your boy. I greatly appreciate it. And if you need to learn price action, I'll leave a link in the description for that. But check out this last video I did on showing you how to not be trapped trader. All right, how to stay with trend. Okay. And make sure you trade with trend at all times so you don't get trapped, because that trap is a killer. Okay. And it's stay with trend. All right. So check this video out right here. It'll put you up on game on how not to be a trap trader, and actually how to benefit from traders who are trapped. All right. So until next time, my name is JD. And as always, I wish you increase on the sudden. Bye-bye.